Yeah, so why don't we just dive into what I'm really excited to talk about, which is the Kai-Zen platform.
Exciting. We'll talk about Kai-Zen. Okay.
Yeah.
Why are you so excited about it? No,
Well,
not technically. Why did you just get all excited?
because I think Kai-Zen it's going to transform how Americans save for retirement. It's a bottom line. If families adopt Kai-Zen and they implement the plan, they actually stick to it and do it, it can be life-changing. It cures the financial disease that we just talked about before, which is people running out of money. Or you see people get chronically, critically ill. They don't actually die from the disease. They die from a lack of resources to treat the disease. So in America, we have a financial disease going on right now. Kai-Zen, I think, is one of the solutions that can really help ameliorate that problem that we're seeing in the market.
You think it's as fundamental as that? You think it's really that transformative?
I think it is.
And I know I'm biased, right?
So, we're both research guys, and one of the things
Total geeks.
has just totally stuck out to me was the Dave Blanchett study, Retirement Success. So they took a look at what drives retirement success, how do people actually become successful in retirement, and they quantified that, and they said, okay, well, most people think it's what stocks do I need to buy, what asset allocation, how should I manage my portfolio, following all of this info, when they really said that doesn't matter. What really matters is how much you save. In fact, 75% of the retirement outcomes from that study was determined by the savings rate.
So you have to have money to make money.
You have to, and what I think is so profound about that is if you think about all the things we can control when it comes to financial planning, retirement planning, we can't control the markets. We can't control tax rates. We can't control, what can we control? It's our behavior, right? And if 75% of the outcome is determined by how much we're able to save, I think that's actually some good news. You're seeing bad news all over. The markets are down, interest rates are going up. You can't buy a home right now. Well, the good news is 75% of your retirement success for you and your family's ability to build wealth is determined by how much you decide to save. So you can cut back on your lifestyle. And then Kai-Zen is a solution where maybe I don't need to cut back as much.
Right, because let's be honest, most people strive to get where they are, have the house they have, the car they have, the holidays, all that good stuff, and you then say cut back on that. It's like, hang on, do I really want to cut back for the next 40 years so I can have better retirement or whatever?
Right.
People won't do that. We know just from human behavior. Oh, you're neuroscientists, you know this stuff.
Yeah.
They're not going to do it. We're going to be driven by the basic instinct of gratification now. So what you're saying is, from your perspective, it's the fact I don't have to give up as much to get to where I want to go. Do you think that's the real thing that's different from what we market, right?
Right.
So I'm interested. I'm genuinely interested in your perspective. From your perspective as a person looking around going, God, there's just a mess out there. At least this gives me a better shot, and I don't have to become a pauper in the process or live the hermit's lifestyle on simple stuff under a rock to get there, right?
Right. So that's exactly right, Daen, because are you familiar with the FIRE movement, financially independent, retire early? So, there's a lot of these, I would say it's generally my generation, but people are wanting to work in their career for X amount of time and, pull the trigger, be financially independent. And one of the ways that you can do that, and if it's savings, cutting back on lifestyle, there are people who are committed to doing that, right? But like we said, most people will want to enjoy life now and postpone those benefits later. So Kai-Zen is a solution. Well, what are we seeing people already doing? Well, if you want to live in a nicer neighborhood, we use leverage, right? We get a 30-year mortgage, and that allows us to afford a nicer home, more bedrooms, live in a nicer area maybe, better school, better access to, just your location. How about how we finance cars, finance education? What if you could finance retirement? What if you could finance your way to wealth? What if you could finance your retirement? Most people don't have access to that, right? You'd have to buy another property, right? You have to put that down payment down. So I'd say for the average household income, Kai-Zen is a way that they can tap into that what wealthy people do, what wealthy people are doing to enhance their wealth.
Now, one of the things that so we know, so it's bring in leverage. The first thing everybody says is risk, right?
Right.
And there's a lot of difference between Kai-Zen and premium finance, and they get mingled up and muddled up and all the rest of it. From your perspective, what's the difference?
So that's really funny because I was going to ask you the same question, but I'll tell you.
I already know my answer. I want to hear yours, right?
So I would say that Kai-Zen has a completely different risk profile. If you look at traditional and premium finance, what are people doing? They need to put down collateral, right? We have to have a net worth of $10 million. And it's always kind of this game of understanding, all right, if the policy underperforms, the client has to really understand that they're going to be on the hook to cover that cash value difference. And the bank wants that, right? With Kai-Zen, though, it's kind of a hybrid program because we are using leverage, but it's completely different. There's no collateral requirements for the client. So, that's a great thing off the start. There's no credit checks. There's no personal guarantees. The ultimate risk to the client, and correct me if I'm wrong, Daen, is in a catastrophic scenario, the only thing you can lose is the principal that you put in. It can never go beyond that.
Right. Yeah. So, well done, Padamine. No, that's exactly right. So, the difference between Kai-Zen and traditional premium finance, first of all, is the amount of leverage you're using. So, if you think about it logically, there's a lot of leverage, which then has a lot of risk. But you can deleverage something which obviously reduces its risk profile. And so where Kai-Zen starts, it starts with the Armageddon situation, says, what's the leveraging ratio I should use in that scenario? Therefore, and the Armageddon's Armageddon. I mean, we pick some really severe tests. So the point then is, everything above Armageddon's is normal day in the park. Because of that de-risking, the banks then don't underwrite you for the loan for the reasons you said. And there's so many people go, it's just a form of premium finance. It's not. It is it's literally, I always make this joke because you're a climber. This is the comparison of an escalator to bungee jumping. Both are going down. There's just a slightly different risk profile, right? Now, I'm not trying to say premium finance is crazy monkey risk. We've been doing it for a long time. We try and risk mitigate, but the sheer amount of leverage being used compared to Kai-Zen and the underlying assumptions being used, traditional premium finance starts with normal, Kai-Zen starts with Armageddon. That's a very different start point.
It's also a different psychological risk profile, I think, for the client, right?